We finally have proof they have been lying to us, and we're going to talk about that in today's video. But take a look at Target with a monster gap up out here today after they released their earnings announcements. And we look at the fear and greed index. We are sitting dead smack in between fear and extreme greed. What is coming up next for the stock market? Then we come over and look at how the indices fared across the board. The Dow was down 0.03. NASDAQ was up 102 points. S&P 500 was up 23.73 points. Russell 2000 was up 2.77 points. We come over and look at advancing issues versus declining. We had 74% of issues advancing on the day with 22.7% of issues declining on the day. We come over and look at the sectors across the board. It was almost all green. Financials slightly in the red. Energy in the red. And communication services slightly in the red. But overall, today was a very bullish day in the market. We got to ask ourselves this question. A favored recession signal appears to be broken. Here's what could change. Now, let me know, do you guys think this recession indicator is actually broken? What it goes on to talk about is talking about the 2-year versus the 10-year bond. And if we come over and look at this chart right here, we know the yield curve has been inverted for quite some time and almost one of the longest periods that we've seen in recent history. Now, here's where the problem is going to come into play. Once the yield curve becomes uninverted, that's when the stock market is going to have a lot of problems like we see with this graph right here. What could actually cause the yield curve to get uninverted? And that's going to be very simple. The US stock clinging to gains after Fed minutes point to September rate cut. And then look right here what we saw today. We had the BLS basically go ahead and update the jobs numbers coming out. Look at where we are now in 2024, a revision of 800,000 jobs to the downside. Now, when we come over here and we look, total non-farm payroll jobs revision, 818,000 jobs. Now, they keep telling us the labor market is strong, but now we almost lost 1 million jobs out here for this year. So let me know in the comment section down below, do you still believe the labor market is as strong as what they've been telling us? Or do you think they've been lying to us all along the way? We come over and look at Target. Target shares spike after profit rises despite cautious sales outlook. Now, we have a lot of warning signs out here. We talked about Target a few moments ago, big gap up, but notice one thing with this gap. We gapped way up here towards the high volume area, but did we close at the upper portion of today's candle or the lower portion? Keep in mind, regardless what they keep telling us, the warning signs are on the wall. How long can they hold off before the stock markets start singing the same tune? We come over today and look at the dollar index. Dollar index, basically a candle of indecision, a spinning top type of candle, relatively small body, big wick on the top, big wick on the bottom as well. Then we come over and we look at the precious metal gold today. Gold basically forming another hammer candle. So we have a hammer, inverted hammer, followed by a hammer. All these candles combined could be part of a reversal pattern. However, let's not forget we have the ABC pattern completion up here at about 25.86. Then as we jump over and we take a look at crude oil out here, crude oil breaking through the 78.6. So what does that set up? We're likely going to come back and revisit the swing low at 70.52. And why would crude oil actually be going lower? Is it because we have a demand issue out there, meaning the economies around the world are starting to slow down, aka we need less demand for crude oil? Now we look at the volatility index. The indices were slightly up or essentially flat for the day, but we see the VIX actually up 2.52 points. And we can see the VIX was actually elevated up around 17 right around lunchtime. And then throughout the afternoon, it continued to dwindle lower. So is this the beginning of the VIX starting to have another volatility spike rivaling what we saw here just a few weeks back? Or is this nothing to worry about whatsoever? Because when we come over and look at small caps today, we're back on the move once again. Keep in mind with the small caps, we still have this gap right above us at about 216.50 that still needs to come back and be filled. However, once we fill that, if we don't get a meaningful pullback, then we are going to want to watch right here about around 222, which is right near this high volume area on the composite profile. Then we jump over and take a look at the Dow real quick. Dow today forming a hammer-ish looking candle, and notice that even though we're not going lower, the angle in which the market is trying to ascend upward is starting to weaken by the day. Then we come over and look at the NASDAQ. Look at the NASDAQ, probed a little bit higher, not quite making it to the 78.6, really having a hard time getting through this high volume area over here on the composite profile. Then we look over here on the 4-hour chart. We're starting to see the MACD indicator starting to roll over. Actually pointed that out this morning. However, we're still in the early stages of this. All right. We do not have a rolling over of the MACD indicator at this moment. However, on the 1-hour chart, slightly different. MACD indicator has been trending towards the downside, and we got to be very cautious. If price stays up here at these elevated levels, the MACD indicator makes it to the zero line, watch out. That could be nothing more than a recharge point for another leg higher in this market. Then when we look at the 30-minute chart, look at the MACD indicator. We are getting closer and closer towards that zero line. And today we did spike up, taking out the high that we saw from yesterday. And now we have another D as in dog shape profile. However, today's range was a little bit larger than yesterday. Now, with a D-shaped profile, keep in mind, we're likely going to get a breakout or breakdown from this pattern. And it's very uncommon to get 2, 3, 4 of these D-shaped patterns back to back. We do see on occasion, but to see 3 or 4 would be very, very rare. Now, with this being said, I am expecting whichever way we break first could be a false break. Do we go ahead and break above and then ultimately come back down, trying to fill some of these lower gaps? Or is the first break going to be to the downside? The buyers come up and buy it back up for another move back up towards all-time highs. I want to make everybody aware Apex 7 is 71% sale off all their valuation accounts, past in as little as 1 day, 50% off reset fees. And if you're a trader that likes to trade the larger accounts like the 150K account, the 250K account, and the 300K accounts, the activation fee for those accounts are only $40. Now, if you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. As we come over and look at the futures markets, notice we were finally able to take out that untested point of control at 19,962.50. Now we're still not above this high volume area, and now we're kind of stuck up and around this area. Do we start to get a pullback, or are we going to start pushing up towards the next high volume area? Keep in mind, right over here is all-time highs in the futures market, which we're not that far away from at this moment. Then as we come over and look at the 30-minute profiles, you can see we have that D as in dog shape profile. We are closing right near value area high. Now, unfortunately, we never made it down towards value area high from 2 days ago, which at some point we will come back and test this level. It's highly probable it's within the next 1 to 2 days. 2 days have now passed. So we're going to see, will it take longer, or do we start to make it down there as early as tomorrow? We look up here above us, we were able to take out a point of control today as well. They brought it up, and you can see how quick they slammed the market back down. Now, as we look at the volume profile levels, value area high will come in at 19,907.00. The point of control is going to come in at 19,853.75. Value area low will come in at 19,827.75. Now, be mindful tonight during the live stream, if we start breaking below value area high, I'm going to be looking to play the rotation on the way down, and the point of control will be my first target-ish location, followed by value area low, and then I will try to push a runner down towards value area high. Now, when we come over and look at the SPY, we're closing with a hammer candle, and keep in mind, this could turn into a hanging man reversal pattern, the weakest of all reversal patterns, but still, we want to be mindful of it. The MACD indicator is not showing any signs of weakness, but when we come over and we measure from the low all the way up here to the high, notice we've had a 10% rally straight up, and we only had essentially 1, 2 down candles in this move back up. Very strong push on the way back up. Can't stop, won't stop. 4-hour chart, we're starting to see the MACD indicator starting to roll over. That could be the early signs that maybe we start to see a little bit of trouble up ahead. On the 1-hour chart, MACD indicator does have a bearish cross, and we have huge MACD divergence as well. Then out here on the 30-minute chart, notice the MACD indicator trying to make it down towards the zero line. And as we look at this, notice we were able to get above the high from yesterday, and we actually closed right near the highs from yesterday, just slightly below that price point. Now, tomorrow morning, we'll be talking about this a little bit more once we get a chance to see how the overnight markets have traded. But if we have a false break up, I'm going to be looking for counter trend moves on the way back down. If we get a false break down, I'm going to be open-minded that that's going to be nothing more than a trap for another move back up, potentially all the way towards all-time highs. Notice with the SPY, we are not that far away. We are within the all-time high candle today, right? We just barely started getting into the lower portion of that range, which actually opens the door that we could start to see higher prices from this point on. Then we come over and look at the S&P 500 futures markets. Notice we were able to take out the other point of control, 5648.50. This has just been a vertical move on the way up. And if you're going ahead and you're using the Fibonacci retracement tool, we need to go ahead and readjust as we made a new high today. Now the 50% level would come in about 54.74. Keep in mind, we're going to have to keep adjusting the Fibonacci retracement tool as long as we keep making new highs until the turn is in place. We don't have an accurate measurement for the Fibonacci tool. Then as we come over and look at the daily profiles, notice we have a D as in dog shape profile. And with this, I'm going to be on the lookout for a false break, meaning if we go ahead and try to squeeze to the upside, Could this be a false break? And then the market ultimately starts coming back down. One of the areas I will be focused on is going to be down here at 5601.25. That is an untested point of control going back from a few days, which still has not come back to be tested. And let's not forget, we still have this huge minus development area right over here on the profile. And at some point, this area will come back and get auctioned. Now, is it highly probable that happens tomorrow? No, I think that would be very unlikely for that to actually unfold for tomorrow. Now, as we look at the volume profile levels real quick, we have value area high coming in at 5643.00. The point of control coming in at 5635.00. Value area low coming at 5628.00. Now, with that being said, all right, if we break above value area high, we start coming back down. I'm going to look to target the point of control, value area low, down towards the lows of today, then push down towards that point of control. So the point of control is not going to be a primary target. It's going to be a runner target. Now, with that being said, if we start breaking value area low, then we start coming back up. I then need to take off the bear hat, put the bull hat back on, look to target point of control, value area high, and see, can we make a push all the way back up towards all-time highs? Now, if you're sick and tired of your stops being hunted, make sure to watch this video right here.